Hi, this is Agil John here to talk about the home healthcare provider sectors in UK of module 7045 SSL Business Analytics and Intelligence. The analysis of task performance will be demonstrated in the session along with the suggestions for enhancement and data-driven sessions for streamlined workflow and resource management. UK healthcare service ended in the pandemic in 2019 with the strategic care backlog with a high waiting time to diagnose and deliver necessary preventive treatment to patients. However, transparency in the preventive care delivery was quite better before COVID-19 pandemic because COVID-19 onwards became worsening to access emergency care being missed with growing frequency. The paper is quite good to deliver a large set of qualitative analysis based for clinical management to assess changes before and after the COVID-19 pandemic. This is the clean data I have collected. Comprehensive industry reports on the residential nursing care and domiciliary care in the UK are available from IBIS World, which also highlights market trends, regulatory factors, and key performance matrices. These sources are accessible online for additional research and offer insightful information about the dynamics of the home nursing industry. The financial performance of the major care providers such as Somerset Care, Shaw Healthcare Group, and Prime Life Limited varies from 2018 to 2022 with substantial returns of the capital utilized and shareholder cash. Shaw Healthcare Group continuously had the highest turnover and profitability, while Somerset Care saw erratic results, including a sizable loss in 2018 and a rebound by 2022. Prime Life Limited maintained steady profit margins and returns as well, despite operating with greater gearing ratios, which indicates higher debt levels. Small companies such as Cedar Group, Care Groups demonstrate significant profit as well. Diverse trends in the turnover, profitability, and financial health can be based on the financial data for different care homes from 2013 to 2017. Somerset Care Limited, for example, reported continuous turnover but profit margin, where the Shaw Healthcare Group witnessed steady but small profit growth. With solid shareholder money and a good profit margin, Prime Life Limited shows strong performance. Healthcare Homes Group Limited experienced financial difficulties and losses, while North Care Limited and Cedar Care Homes Limited demonstrated stable or improving assets and liquidity balance. Descriptive analysis summarizes a data sets of the attributes, measurements of position, dispersion, frequency, and central tendency are used despite variation in the profit before taxes and profitability margins. The descriptive study from 2030 to 70 reveals a consistent increase in turnover from 31 million in 2030 to 37 million in 2070. Although there was some fluctuation over this year, net tangible assets and shareholders' money generally showed an upward tendency. Liquidity ratio stayed low, reaching a high of 7.19 in 2040 before leveling down. Significant variations in the gearing up suggested different degrees of debt dependence. The average number of employees was 1,450, which stayed constant. As a reflection of operational and financial instability, returns on the shareholder funds and capital utilized varied significantly, peaking in 2050 and declining by 2070. The turnover is 23 million, as is most likely average high range that describes dispersion. The median profit margin is 6.27, which shows that they are profitable. The Cotter's coefficient for profit or loss is 2.14, is grossly above the acceptable standard, and so far is the shareholders fund, which is value of 2.789. Gearing there has been median of 0.94, which is moderate debt dependency. A turnover of average value is shown through a median turnover of 24 million. The turnover range, however, is quite high at 83 million. The median of profit margin is 7.02, indicating moderate profitability. The median of return The median return of the shareholder fund is relatively high in 14.49, showing shareholders value enhancement. If we look at the above table, it can be seen that the median gearing is 1.17, meaning the company is highly reliant on the debt. There is central turnover with a median of 24 million, while the range of 83 high range is 83 million. The median of the profit margin is 9.34, which indicates that the companies are moderately profitable. Median return to the shareholders fund stands impressive at 20.38, which means that the various organizations effectively create shareholders value from this analysis. The gearing ratio, also known as debt ratio, has a median of 1.14. In 2022, turnover reached 51 million pound, a steady growth from 2018. In 2021, profit growth before taxes peaked at 4.22 million, but in 2022 it fell down to 3.95 million. Growth was shown in both net tangible assets and shareholder fund, which peaked in 2021 at 28.95 million before falling to 25.45 million in 2022. Profit margin fluctuated with 2018 seeing a top of 11.67 percent. Capital employed and return of shareholders fund varied with notable drops in 2022, while gearing showed fluctuations and steadied at 137.89 in 2022. Liquidity ratio stayed low throughout. From the 2022 table, fiscal statistics of different financial measurements from the 10 companies has been summarized descriptively. Main measures of the financial performance are turnover, gross profit margin, return of the shareholders funds, and number of employees. Absolute values of the skewness greater than 1 or less than 1, profit or loss, and net tangible assets attest to the fact that the data are skewed, and kurtosis values are suggested for the absence of extreme data outliers. These ratios reflect variations in the liquidity ratio, which is also indicates different stability of the finance. The table presents the key finance metrics of the 10 organizations. Coefficient of the variability proves the turnover, profit, or net tangible assets has been created variability for which are vast ranges. Accounting measures of the turnover and profit or loss has the higher power figures, which indicates large scale fluctuations in the financial performance. The profit margin and the return on the shareholders funds are positively skewed, implying data symmetry, while negative kurtosis entails few observation in the extreme values. Different liquidity levels exist, suggesting that the financial stability as well is dissimilar. Significant correlation between financial metrics of the year 2013 to 2017 are revealed by the correlation analysis. Notably, turnover has a substantial correlation with both the profit before taxes and the number of the employees. Turnover and the profit margin have negative association, although return on the capital employed and profit margin have a positive correlation. Significant correlation between financial metrics are revealed by the correlation analysis. Strong positive relation between the turnover and the net tangible assets and the staff count are among the main conclusions. Furthermore, turnover and the staff size are strongly negatively correlated with the profit margin, suggesting that the higher turnover and the staff size have been detrimental impact on the profit margin. The reason for using SPS is because it provides p-value. It provides better analysis as well. Regression analysis is the collection of statistical techniques used to ascertain the correlation between one or more independent variables and the dependent variables. The R-square peaked at 2019 at 0.827 and stayed comparatively high from 2017 to 2022 with a range of 0.497 to 0.689. Those are the histograms used. Then here R-score is 0.44959, so 45% is explained by this model. The profit is increased by 743.4136 per increase in each employer. Increase per each employer. P-value is significant because which is less than 0.05. Here R score is 89% explained by this model. We can see in this model here is the two p-value which are number of employee and turnover. Here they are also significant as I said earlier, which is also less than 0.05. Then the investigation showed that the correlation between the profit margin and the financial variables varied from year to year. Significant effects were shown by key findings in 2016 and 2019, with the turnover displaying negative coefficient and profit or loss before tax exhibiting a positive correlation, enhancing profitability and making well-informed financial decision required a focus on strategic management of these KPIs. Here are the reference I used, and thank you.